Welcome to USMK Insights, where we focus on US stock technical analysis. Using charts, trends, and price action will help you understand the market rhythm and make informed buy and sell decisions. Alright, hit subscribe and let's begin today's learning journey. Looking globally, Tuesday was truly a showcase for the US stock market. The performance was impressive. All three major indexes surged. The Dow Jones rose 1.78%. The Nasdaq jumped 2.47% and the S&P 500 gained 2.05%. These strong moves show the market's high optimism. From this, we can see the index's rally reflects very strong market sentiment. The mood was extremely bullish. As for the reasons, I'm sure everyone knows by now. The main reason is a positive catalyst. The easing of tensions between the US and Europe brought renewed optimism to the US market, because the US government once again delayed the 50% tariff on Europe. The deadline was pushed to July 9th. This move in fact gave the global market some breathing room, so the mood turned optimistic. Also, US consumer confidence rebounded and global bond prices climbed, both helping to lift the market sentiment. Now, there are signs Japan may intervene to stabilize their bond market. So overall, US stocks stood out and market sentiment became extremely positive. Behind this optimism are these recent developments. So the main driver for the rally was a shift in sentiment. The market turned highly optimistic, which unleashed a strong upward momentum. Among the three major indexes gains, we see that the tech sector stood out. Tech stocks saw broad gains. It was an across-the-board rally. Most tech names advanced. The magnificent seven tech giants, especially Tesla, led the rally. Tech surged on their strength. Tesla's gains were especially strong. Its market cap soared, almost up 7%. That's a huge move for such a big company. Behind this surge, many investors are watching to see if this trend can continue, right? Especially among hot topics. The Magnificent Seven are in focus. Tesla in particular is a market favorite. It's a hot stock. For those following Tesla, the main question is, how will Tesla perform going forward? Because this year Tesla has faced some challenges. What kind of challenges? In Q1 this year, Tesla's global deliveries fell year over year, down by 1%. Tesla's sales dropped worldwide. Sales declined sharply. Earnings also disappointed, especially in Europe. Europe is Tesla's third largest market. Performance there has been very weak. For example, in Germany, sales plunged 46%. In France, down by half, falling 59%. In Sweden, sales crashed 81%. Even in the UK, once a stronghold, April sales dropped 62%. Given these numbers, many are puzzled. Why is Tesla's sales falling so much, yet the stock price is up? Sales are down significantly, so why is the share price rising? As for the reasons behind the sales decline, everyone knows them. It's no secret. A big part of the drop is attributed to Elon Musk himself. Why? Because his controversial politics and aggressive public image have led Tesla to lose support from its core customers. So there are more voices opposing Elon. This directly impacts Tesla's sales. So even as EV demand booms globally, well, Tesla should have been entering a golden era of growth. But due to Elon's actions, Tesla's brand has suffered. It's become a brand crisis. So the sharp drop in sales is closely tied to Elon personally. There's a direct connection, but many still don't understand why. Despite declining sales, the stock keeps rising. Hasn't this year seen a steady drop for Tesla? The decline is obvious. It's been falling for months, and earnings have been disappointing. But why does the share price still climb? It seems the market no longer cares about Tesla's core businesses. Why is that? Because now investors are not just looking at EV sales. They are focused on Elon's big promises for the future, like autonomous vehicles, self-driving, and AI robots. That's what investors are watching now. So Tesla is now viewed as more of an AI company. The focus is no longer just on car sales. It's on future innovation. So even with sliding EV sales, especially in Europe, where sales have dropped 4 months in a row. The stock price still rises. Shares remain resilient. Despite these headwinds, a positive market mood has lifted Tesla. Its performance outpaced other tech giants. It led the sector with nearly 7% gains. That's a key reason. Despite declining sales, Tesla stock remains strong. The market is focused on Tesla's future innovation. That's why it's so resilient. Now investors care more about the company's future potential. It's no longer just an EV company. It's about AI, robotics, and smart tech. That's the direction for the future. So capital is willing to back this vision. That's what's driving the strong price action. So looking ahead with these positive drivers, Tesla is expected to stay strong. With such bullish expectations, how far can Tesla go? How much more upside is there? Especially now with renewed optimism, it's already broken out of its short-term range. And also, there's more good news. Elon Musk announced he's returning to focus full-time on Tesla, putting all his energy into the company and his other ventures. This return has boosted market sentiment and the stock price. So overall, this positive mood is driving Tesla's share price. Optimism is clearly lifting Tesla right now, although sentiment is currently very bullish, which has pushed the share price higher, allowing Tesla to break out above its previous range, and the stock is showing strong momentum. The key question now is, can this strength actually be sustained? Can this rally keep driving the stock even higher from here? That's what we're all watching for. It's what every investor wants to know. After a big move today, will the stock fall tomorrow? Is that a real concern? Absolutely. So, how far can this rally go? With all this bullish sentiment, where could Tesla stock price end up next? That's a big question we need to answer today. While Tesla's performance is strong, there's one area that's not ideal. That's its trading volume. Volume has not significantly increased. We haven't seen any real spike in volume, yet the stock has rallied nearly 7%, but the volume increase has only been modest. For the rally to continue, we need to see more sustained volume. Just like in earlier rallies, a sustained uptrend requires stronger volume at each stage. Take a look at the bottom here. When the stock reversed at the lows, we saw a clear increase in volume. There was definite accumulation at the bottom, especially during the stabilization phase. After the stock found support, it began to reverse higher. That kicked off a new uptrend. So as it pushed higher, there was buying interest at the lows. You can clearly see the uptick in volume. There was volume support. But as Tesla continues higher, it's also running into resistance. The biggest challenge now is this major area of heavy trading. Moving further up, it needs to break through previous resistance levels. To do that, we need to see more volume come in. Only then can it absorb the overhead supply. Without enough volume, it will struggle to break through resistance, and the upside will be limited. So let's take a closer look at the technicals. Overall, the technical picture is still quite positive. From a technical standpoint, this reversal looks very strong. You can see it clearly here. What kind of base is this? This is a textbook reversal pattern. It's a classic W bottom, isn't it? It broke out decisively above the neckline resistance, triggering a buy signal. After pulling back to retest the breakout zone, it stabilized again. Now it's holding that level, so technically there's every reason to expect further gains. After this kind of reversal signal, the odds of continued move higher are quite strong. So from a technical perspective, this reversal setup looks great. But for Tesla to keep rallying, we still need to see steady, sustained volume coming in. It doesn't have to be explosive, but there must be consistent volume growth. What matters is a gradual and steady increase in volume. That's what's needed for further gains. Because as the stock pushes higher, it's approaching a key resistance zone. This area has heavy trading volume, so there's a lot of overhead supply up here. Once the stock enters this supply zone, selling pressure will increase. you will see more profit taking from trapped holders. That's when we will see more selling emerge. To absorb this selling pressure, the stock will need strong volume support. There has to be increased buying to it through this resistance. Only then can the stock move higher and extend its rally. So let's make a bold prediction. If Tesla continues to ride this wave of positive market sentiment, how much higher can the stock actually go? How much upside is left? Can it keep moving up from here? How far can this rally go? Let me illustrate this point. Take a look at this chart. It's clear that around the 423 level, there's significant resistance overhead. That's because if you look at these three candlesticks, they clearly form a reversal signal indicating a possible top. These three bars, if you look at this cluster of three, the leftmost bar rallied sharply. But during the move up, you can see the volume started to stall. There was clear hesitance in the upward momentum. As a result, on the second bar, as price pushed higher, you saw what? A long upper shadow appear. Even though the first bar looked strong, indicating strong bullish momentum, that was actually the last push from buyers. All the buying power rushed in at once. After that, the momentum was spent. So the next day, the stock gapped up but quickly sold off, leaving a prominent upper wick. That upper wick signaled that seller clearly took control. In that spot, the bears gained the upper hand. So in this area, the bulls ran out of steam. The last of their buying power was spent. That final surge was all they had left. After that, the momentum faded. The market quickly reversed. That's why there's so much overhead supply here. It's where a lot of traders are trapped. This was the bull's last stand, the final attempt to push higher. But it didn't last. After that, the momentum dried up. There just wasn't enough buying to keep it going. So for the stock to push higher, the bulls needs to overcome this resistance. That's why you see this pattern, three consecutive bars signaling a reversal. That's a clear warning of resistance ahead. There's a lot of trapped traders at this level. If you want to break through this zone, it will take more than market sentiment. You will need more than just optimism to sustain the rally. You need real buying power. You need fresh capital to keep pushing the price up. Without that, sentiment alone isn't enough. You need real money flowing in, actual funds to fuel the next move. Capital is the strongest driver. Only real money can break resistance. Once that pressure is observed, the path is clear. But that requires strong volume support. So Tesla's current uptrend is still intact. The bullish structure is still there. The chart hasn't broken down, especially in this optimistic market with risk appetite rising. There's likely to be more inflows. Short-term speculation will increase. That means more money coming in. So in the near term, there's plenty of capital in play. Liquidity isn't the problem. What matters is can this buying power be sustained? Short term, as the stock tests resistance, the key is continued inflows. That's what will help absorb the overhead supply. So in short, we need to watch for volume expansion. That's a real signal. With strong sentiment guiding the market, there's no shortage of funds out there. The key is whether those funds keep flowing in. That's what matters most. If the inflows continue and the volume picks up, then you will see a sustained rally. It doesn't need to be a huge spike in volume, just more than before. As long as we see a steady, gradual increase, with volume building layer by layer, the uptrend can continue. That's what we want to see. Gradually, steadily increasing volume. Just a gradual build, steadily increasing. Once that happens, Tesla can walk through the overhead supply above. Then that resistance zone is no longer a major hurdle. Once the overhead supply is cleared, the next rally can gain momentum, and the probability of a continued uptrend goes even higher. So with all that in mind, let's make a bold prediction. Under current market conditions, driven by sentiment, can Tesla reach new highs? We don't know for sure. We're not forecasting a record high here. We're not making that kind of prediction, but realistically, at this level, it's worth trying for that 420 to 423 range. That zone around 420 to 423 is clearly within reach. It's a realistic target. Given how resilient Tesla share price is, the odds of breaking through are pretty high, especially if we see sustained volume. If volume steadily increases, Tesla can absorb the overhead supply. That overhead pressure can be released. That whole resistance area can be cleaned out if volume keeps building. But to break out further and hit a new high, that would require a much higher level of market conviction because there's clearly some selling pressure here. So within the next month, a move to 423 is definitely possible. It's a realistic target to test. And honestly, this resistance isn't that strong. Market confidence in Tesla remains high, even with disappointing sales numbers. Tesla may not have met expectations, but investors still believe in the stock. The market continues to have confidence, which keeps the share price strong. That's why Tesla has the capital to challenge this level. It's not a difficult barrier to break. While 423 doesn't present some resistance, it's not a major obstacle. For Tesla, continuing this upward trend and reaching 423 looks highly likely. It's a probable scenario. So, in summary, over the next month, there's a good chance Tesla tests the 423 level. That concludes today's analysis of Tesla. If you have any thoughts or opinions, feel free to leave a comment below and let's discuss it together.